Hello dear traders, my name is Elizabeth Belugina and you are watching Forex Daily Trading Plan by FBS. It's Monday, the 29th of July, and the USD is trading near 2-month high versus a basket of currencies. American currency is supported by better than expected US GDP figures released last week. We know that American GDP growth turned out to be 2.1% versus the forecast of 1.8%, and these positive figures made investors think that the Federal Reserve will cut interest rates this week, but the cut won't be very aggressive, and this is a positive factor for the American currency. In addition, the White House economic advisor said that President Donald Trump ruled out intervening in markets to weaken the USD, and that also helps the American currency. Other currencies like the euro, the British pound, the Australian dollar are weakened by their own negative factors, so we have the situation of the strong American currency. If we look at the economic calendar, we will see that not much is planned on Monday. Traders will be awaiting other events like the meeting of the Bank of Japan on Tuesday and the upcoming meeting of the Federal Reserve on Wednesday. So this is the upcoming agenda. Let's switch to the charts to pick out some ideas for Monday. So here we see that euro dollar is trading on the downside, close to support area of 1.11, 1.1115, and the odds are that the euro will stay under pressure and that the USD will try to pierce these levels and get lower to the areas of 1.1050, 1.10. We will see them in case there is a break below 1.11. But notice that surely we will need to see the close on the daily basis below 1.11 to witness the further movement to the downside. Of course, the euro is already significantly low. We can see that on the 4-hour chart there is some divergence in awesome oscillator and the price. So we may see minor corrections in euro dollar to the upside. However, they will meet resistance firstly around 1.1145, and then there will be strong resistance between 1.1180, 1.12. Here, if we arrive at this point, traders will obviously reconsider entering short positions in euro dollar at higher prices. The British pound is declining. There is a higher chance of no-deal Brexit in the United Kingdom, and actually the country is making preparations for this outcome. As a result, despite the fact that much of negative news is already priced in the British pound, we can still see a significant possibility that the pound will test lower levels. So the odds that it will decline below 1.2350 are significant. Levels at 1.23, 1.2250 will be the natural next targets for such a move in currencies. The USD is trying to hold grounds versus the Japanese yen. The currency, Japanese currency, rose a bit on Monday. It was related to buying by Japanese exporters. However, with the Bank of Japan's meeting, the dovishness expected from the Japanese central bank as well. Likely the USD will be able to stay supported. We can see that the currency pair has the support of the 50-day moving average at 108.38 level. Decline below this level will leave us to support around 108.10 and 108. On the upside, we have a significant resistance just below 109 mark, and advance above that level is needed to open the way up to the further important level at 109.60. If if the Bank of Japan is dovish and the Federal Reserve is not so dovish, this advance to levels around 109.60, 110 will be what we expect to happen during the next few trading days. In the meantime, today dollar yen can still fluctuate around 108.60 as market players just wait for the important decisions of central banks to arrive. The USD is strong versus commodity currencies, versus the Australian dollar. We can see that after the break to the downside last week, the USD went to 0.69 mark and is testing now the lowest levels since the end of June. The decline below 0.6895 will open the way down towards levels at 0.6865 and 0.6830. So far, it looks like the Australian currency is capable of further downside, and attempts to advance will meet resistance in the vicinity of 0.6960 mark. If we look at the currency pair, US dollar, Canadian dollar, it stayed above 1.3150 mark. This tells us about the positive picture for the pair in the near term, despite the shooting star candlestick we saw on Friday. So the US dollar will likely try to test the high of Friday, located just below 1.32 mark, and the next level to watch will be 1.3225 level. Oil prices remain more or less supported by the global uncertainty, the fact that there are concerns about oil supply, and the fact that US inventories have become smaller. However, still we see that there is significant resistance ahead of Brent. The technical levels prevent the price from getting significantly higher. We see that there is a kind of resistance on the 4-hour chart. So the near-term risk is for the price to go down and test levels about $1 lower from the current 63 mark. So that may be a chance of some trading as well. Thank you for your attention. This was the take of the market of Monday. We wish you a great trading week and profits with FBS.